Hello warriors, I hope you're all doing amazing. I hope all of your papers went exceedingly well and you're all charged to rock your costing exams. I know some of your exams didn't go as expected, but now, irrespective of whether it went well or not, now it is out of your control. So there is no point worrying about it. Just tell to yourself, I've worked hard to reach till here. I've given my best in my two papers. Now it is out of my control. I get good marks, I don't get good marks, I don't have any control over it. But I have control over my balance papers and I will ensure that I give my best in the remaining papers. Yes, you energized now? Perfect. We're here for a special reason. We're here to revise maximum topics of CA intercosting in less than 5 hours to help you ace your examination and help you in your last 1.5-day preparation. See, one of the main reasons for how well we score is how well we prioritize this 1.5 days, because this 1.5 days is everything we have now. So first, I'll give you some quick tips and important topics for the 1.5 days, and then we will go ahead with our rapid revision. Okay, first let's have a look at the CA intercosting syllabus. I've made a detailed ABC analysis of CA intercosting syllabus to help you in your 1.5 days. So every chapter I've categorized it as A plus A, B or C category. Again, in the chapter I've given you the top 80% and the next 20%. That is the top 80% of examinations. That is top 80% of questions are asked from these concepts, and the next balanced 20% questions are asked from the next concepts. So undoubtedly, the top 80% are our priority. So firstly, theory covers approximately 20 marks. It is undoubtedly the A plus category chapters, and even in theory, without fail, have a look at the introduction chapter, material, labor, overheads, and budget. Remaining chapters, if you have time, you can very well look at that. For the important theory questions, I've sent you a separate theory booklet, which is available on Telegram. And from the practical chapters, material, 8 marks on an average, A category. The important topics, first is EOQ, next is inventory levels, next is material cost calculation. All the balanced topics, you put it in the balance 20%. Labor, 9 marks on an average, A category. Labor turnover ratio and Halsey and Rowan plan fall in the top 80%. Overhead chapter, 7 marks and falls in A category. Departmental rate method, charging overhead as per departmental rate method, and 3 methods of reapportioning the overheads falls in the top 80%. Next, ABC, 10 marks, every attempt without fail. Undoubtedly, it falls in A plus category chapter, one of the simplest, easiest scoring and a very small chapter. So entire chapter, you have to study it without fail. Cost sheet, again 7 marks on an average, B category. Majorly have a look at cost sheet with the stock adjustments. Next is cost accounting system, on an average 5 marks, C category. Okay, the top 80% question will be based on reconciliation statements. Next is job batch unit costing, 4 marks on an average, C category. Without fail, have a look at the EBQ questions. And next is contract costing, 6 mark on an average, B category chapter. Major thing to remember is the contract account preparation. Okay. Next is process costing, 8 marks on an average, A category chapter. So majorly 2 types of problems. First is preparation of process account with the normal loss, or abnormal gain. That is simple questions. Next is preparation of process account with stock adjustments. All the balance concepts falls in the balance 20%. Joint product by product, 4 marks on an average, C category. Okay, majorly have a look at the joint product evaluation. Next, service costing, 10 marks, every attempt, A plus category chapter. Okay, all the topics falls in the major category. Do it in the following priority. First, have a look at the passenger transport service. Next, the goods transport service. Next is the other services. Next, standard costing, 8 marks, A plus category chapters. Okay, complete chapter, have a look at that. Marginal costing, on an average 11 marks, complete chapter, look without fail. And budgetary control, on an average 6 mark, B category. Okay, majorly look at flexible budget questions and then sales budget, production budget, and purchase budget. Clear? So this gives us a clear idea of what topics are important, what chapters are important, so that we prioritize. See, doing ABC categorization does not mean that you only study A category chapters. It means that you give more priority to A category chapter. It means that if you have less time, you sacrifice your C and B category chapters first. You don't sacrifice your A category chapters. Okay. So in our A plus category, we have 5 chapters which cover 60 marks. In our A category, we have 4 chapters which cover 32 marks. So together, these 9 chapters cover 92 marks. So first, focus on these 9 chapters. Then come to your category B and category C chapters, wherein 6 chapters together cover only 30 marks. Clear? So now, in the 1.5 days, if you are in a position to revise all the chapters, nothing like that. That's amazing. But if you cannot revise all the chapters thoroughly, okay, the order of sacrifice, what you should sacrifice first. Okay, first sacrifice the balance 20% of B and C category chapters. Then if you have to sacrifice more, sacrifice the top 80% of B and C category chapters. But ensure that without fail, you do A plus and A category chapters. So the order is first do A plus category chapters, then you do your A category chapters fully, then you do the top 80% of your B and C category chapters. Clear? Now, 1.5 day planner. How I would have planned my 1.5 days before I go and write my exams. I would have bifurcated the entire duration into 4 parts. First is the day of law exam, that is from 8 p.m. approximately till midnight, and next is next day till afternoon, next day till night, and next is on the day of exams. So we can follow 2 approaches. Okay, some students prefer to study it on a chronological basis, topics on a chronological basis, and the other students, they may prefer studying based on the categorization, the weightage, ABC categorization. Okay, both are perfectly fine, but ensure you don't miss out on your A plus and A category chapters. Okay, so if you're doing it on a chronological basis, on the day of law exams, do all the elements of cost: introduction, material, labor, overheads, and ABC. And next day, do all the methods of costing. Okay, all the different methods of costing. Then from afternoon to night, do the all balanced chapters. Okay, and on the day of exams, have a look at theory questions again and have a look at all the formulas again. Okay, and if you're doing based on the ABC categorization, today do your A plus category chapters. Tomorrow morning till noon, do your A category chapters, and later on do your B and C category chapters. Okay, so that even if there is a delay, even if there is a lag, you sacrifice only your B and C category chapters. You don't sacrifice A plus and your A category chapters. Clear? And some quick and very important exam hall tips. It helped me very much, and I hope it will help all of you as well. First, find one comfortable question. No matter how tough your paper is, you will have that one question which is very easy, simple, and scoring. Go and pick that one question and solve that first, because that would be a confidence booster. If you get that first question, if you solve that question, then you slowly get the confidence to solve other questions. That's the first thing. Next, attempt for 100 marks. Don't leave even a single question. Okay, plan your time well in advance so that you can attempt for 100 marks. That is very important. You write it, you attempt the answers rightly, you attempt it wrongly, but attempt for 100 marks. It makes a difference. Okay, next, theory is your friend, especially in costing. Okay, on an average, okay, practical questions, okay, for every mark we generally take 2 minutes, but theory for the same question we just need 1 minute. Say you have a 20-mark theory question, we can finish it off in 20 minutes, but a 20-mark practical question needs at least 40 minutes. So always, if you have theory, close your eyes and attempt theory. Okay, theory is your friend. And in practical papers, you get very good marks in theory. They don't deduct much. They deduct marks in theory only in papers like audit and law. So for practical papers, go and attempt. They are going to give you marks. Okay. Next, how do we write for 100 marks? Okay. The rule of 1.8. We should give 1.8 minutes for every mark. That is, if you have a 20-mark question, on an average 35 minutes. Okay. So at 2 we start the exam. Okay, ensure that 2:35 we try to finish the first question. Okay, there might be a small delay or a small lag, but ensure that you are aware and you're tracking your time. If you just do this, you would be in a position to write for 100 marks. Generally, what happens is we know very late that we are going very slow, and then we are not in a position to cover up. But if you know well in advance, in the first half an hour, in the first hour that we are behind the time, we can take actions and increase our speed. So 1.8 marks per minute, that is 35 minutes for every 20 marks. Next, read the question completely and thoroughly. Don't hurry up in reading the question. It is very important. We might leave some simple sentence which might form the crux of the question, and then there would be no point solving the entire question. So read the question completely. If you want, read it twice, but don't hurry up in reading the question. Next, take common sense with you. It sounds funny, but costing is more of a paper of common sense. Don't leave your common sense and go write your examination. We are going to make blunders. Okay, so have common sense and solve the questions with common sense. You will get answers. Next, don't focus on handwriting, focus on the presentation. Okay, it is a professional exam. You won't get marks for your handwriting. You get marks for your presentation. Presentation means the approach which you follow, the working notes which you make. For that, we get our marks and not for our handwriting. Don't focus much on your handwriting. Focus on your presentation. Next, last point, and the most important, I would say, keep calm. Okay, most of us face difficulty in writing exams, not because we are not prepared. It's not because the exam is tough. It's not because it is out of box. It's because we have taken so much pressure on ourselves. Okay, believe me, it makes wonders. Keep calm, take a deep breath, keep calm, and go write your exams. Okay, stay calm and conquer your exams. Now let's get to our rapid revision. So let's begin with the rapid super fast revision. So let's get to the world of costing. So what is costing? It is the systematic process of ascertaining cost. I am a manufacturer of laptop. I want to know what is the cost to manufacture one laptop. We follow a systematic process and get the cost. That is called as costing. Okay, and to manufacture any unit, we have to incur cost. Okay, cost can be bifurcated into three major categories. First is material, next is labor, next is expense. Material is tangible item having physical substance. Labor is all employee related cost, and anything which is neither material nor labor is called as expense. Again, material can be further bifurcated into direct material, indirect material, labor into direct labor, indirect labor, expenses into direct expense and indirect expense. All this direct material, direct labor, direct expense, on what basis they are bifurcated? If we are in a position to make a one-to-one association of cost with the cost object, then we call them as either direct material, direct labor, direct expense. If we are not in a position to do that, we call them as our indirect costs. Okay, so direct material plus direct labor plus direct expense, we call it as prime cost. And indirect material, indirect labor, indirect expense, together we call them by a name overhead. Okay, so the elements of cost, okay, practically we call the elements of cost as material, labor, expense, and then all the indirect costs together we call by a name overhead. So we discuss costing and we also discuss the elements of cost. Now, cost can be calculated for goods as well as service. So costing can be done for existing goods or services or new goods or services. For existing goods or services, what is our objective? We want to calculate cost. That is the first objective. And second, why are we calculating cost? So that we can try to reduce the cost. That is, first is cost ascertainment, next is cost control. And for manufacturing new goods or services, what is our objective? What are we saying? We are trying to take a decision whether to manufacture or not, whether to accept the offer or not. So for existing goods or services, either it is cost ascertainment or cost control. For new goods or services, we have decision making. Decision making we make on the principle of marginal costing. And coming to existing goods or services, cost control, we have two techniques. One is budgetary control, one is standard costing. What we do is we set a benchmark and then we compare the actual performance against the benchmark. Okay, in budgetary control, we compare budgeted performance with the actual performance. In standard costing, we compare the standard performance with actual performance. I used to get the product at 100 rupees. Okay, so based on my past, I think I will get the product at 100 rupees. This is budget based on past. Ideally, if I go place the right offer, compare all the prices and buy the goods, I can get it at 150 rupees. This is standard. Actually, I got the goods at 200 rupees. So the comparison of 100 with 200, this is covered in budgetary control, and the comparison of 150 to 200 is covered by standard costing. Now coming to cost ascertainment. Okay, this is actually we are calculating the cost to manufacture one laptop. What is the cost I'm incurring? Okay, so we have different methods of costing for that because it varies from industry to industry. So we have job costing, contract costing, service costing, unit costing, batch costing, and process costing. So these are the 6 methods of costing. Job costing is used in jobbing industry where goods or services are provided as per the specific requirements of customer. Contract costing, it is used by contractors to calculate the cost of providing service. It is also based on the specific requirement of customer. So what is the difference between job and contract? Job is generally for a period less than 1 year. Contract is generally for a period greater than 1 year. And service costing, it is used to calculate the cost of providing generalized services. Okay. Next is unit costing, wherein you are just manufacturing a single product and the goods manufactured are identical. Okay. Next is batch costing, when goods are manufactured in a batch or lots. And then is process costing, wherein to manufacture one goods, the goods passes through 2 or more processes. Clear? So this is the entire world of costing. Okay. Based on that, we have the 15 chapters of costing. Okay. So let's revise the entire world of costing. First, we have costing, then we have elements of cost. Costing can be done for existing goods or services or for new goods or services. For new goods or services, we are taking a decision. For existing goods or services, we are either calculating the cost, that is cost ascertainment, or we are trying to reduce the cost or control the cost, it is cost control. Okay. So the chapters in CA intercosting, first is introduction. Then based on the elements of cost, we have material, we have labor, we have overheads. And again, we have an extension of overheads. Okay, it is called as activity based costing. And then all the elements of cost, if we put in the form of a statement and get the total cost, it is called as cost sheet. So that is also a different chapter. And next, okay, we get the cost, but how do we get what is the cost? How do we get the details? So we have to record all the things, all the cost related data. That is called as cost accounting. So we have the cost accounting system chapter as well. Then to calculate the cost, to ascertain the cost, we have methods of costing, wherein we have job, batch, unit costing, contract costing, service costing, process costing. And then again, in process costing, okay, in a process, if more than 1 units are manufactured, how do we distribute the cost? Okay, this we get by the principle of joint product and byproduct. Okay, next, to control the cost, we have standard costing and budgetary control. And for decision making, that is for new goods or services, whether to manufacture or not, whether to accept the offer or not, we have marginal costing. This is the entire world of costing in one simple chart. Okay, now let's get to our first chapter, material. It's a very important chapter. Okay, on an average, every attempt has 8 marks of question from this chapter, material. I've divided this chapter into 5 headings. First, we'll see EOQ and its related concepts. Then we'll see inventory levels and its related concepts. Then we'll see the material turnover ratio. Then we'll see the stores ledger, and then we'll have a look at the miscellaneous areas. So first, EOQ and its related concepts. First thing to remember here is, in this entire chapter, our only focus will be on raw material, not at any other cost. Say for example, we are manufacturing 5 lakh units of finished goods. We don't want 5 lakh units of finished goods. We want to manufacture that 5 lakh units of finished goods. What is the raw material we are using? So if it is 10 lakh raw material, our entire objective in this chapter is to calculate the cost of this 10 lakh raw material. Clear? And whenever we are telling the term material, it means direct material, because indirect material is already covered in the chapter overhead. Say for example, okay, to get a raw material, okay, I'm incurring the following cost. To purchase raw material, I'm incurring 10 rupees. Okay. To order and for transportation, I'm incurring 2 rupees. And for storage, to store them in a godown, I'm incurring 1.5 rupees. So the total cost comes to 13.5 rupees. What is my objective? Okay. What is the objective of business? To get the raw materials at the minimum possible cost. So when I'm telling the minimum possible cost, is it the minimum purchase cost or is it the minimum total cost? Do I want to reduce this 10 rupees or do I want to reduce this total cost? So the objective of business is to reduce the total cost of inventory management. Okay, that should always be there in our mind, that our objective is to reduce the total cost of inventory management. Okay. So now in a year, I want 10 lakh units of raw material. Okay. I can buy it at different options. I can either buy 10 lakh units at one stroke, or I can do 5 lakh into 2, or I can do 1 lakh into 10, or I can do 1 unit into 10 lakh. So I can do any number of combinations. Okay. So I can do any number of combinations. What is the objective? I am looking at what order quantity my total cost will be minimum. Okay. So say for example, if I buy 2 lakh units at a time and I buy it in 5 lots, my total cost of raw material management would be minimum. Okay. That order quantity, what is that order quantity at which the total cost would be minimum? That is what we are seeing. Okay. So to get to that order quantity, first we need to know what is the total cost of inventory management, right? What is the total cost? What all do we have? First, we have the purchasing cost. That is the cost to purchase the raw material. That is the amount paid to supplier. Say for example, for 1 unit, we paid 10 rupees. So to get 100 units, what is the cost we pay? How do we get? Cost per unit into number of units. So purchasing cost is equal to cost per unit into number of units. Okay. Now, if there is no discount, okay, then the purchase cost will be same irrespective of order quantity. Whether I buy 10 lakh units in one go or I buy 1 unit into 10 lakh times. Okay, if there is no discount, the purchasing cost, total purchasing cost will be the same. Clear? So this is the first cost, purchasing cost. Then we have supporting costs. What are the supporting costs? First, we have the ordering cost. That is the cost associated with placing an order for raw material. Say for example, before placing an order, we have to travel, check the raw material and come back. That is one cost. Or we have to transport the raw material from supplier's place to our place. That is also ordering cost. And again, we have to inspect the raw material. All these are ordering costs. How do we get the ordering cost? We get it as ordering cost per order into number of orders. Say for example, for one order, I'm incurring 100 rupees. And in a year, I've placed 10 orders. So I get ordering cost per order, 100 rupees per order into 10 orders. I get the total cost. Ordering cost per order, this will be given in question. And the number of orders we have placed in a year, this needs to be calculated. Now, how do we calculate number of orders to be made in a year? Okay. Say for example, in a year, I want 10 lakh units of raw material. And every time I'm placing an order, I'm placing an order for 1 lakh units. So 10 lakh is the total requirement of raw material. And every time I'm placing 1 lakh. So how many times I will place an order? I'll place the order 10 times. How do I get it? It's the total requirement of raw material divided by order quantity. Order quantity means how many units we are placing while we are placing an order. It is 10 lakh divided by 1 lakh. We get it as 10 orders. Okay. So ordering cost is a cost associated with placing an order. Okay. So ordering cost is ordering cost per order into number of orders. So number of orders is the annual requirement of raw material divided by ordering quantity. Again, here is one interesting observation. When the ordering quantity increases, number of orders decreases. So ordering cost also decreases. Let's see with the help of an example. Say my ordering quantity is 1 lakh. Okay. So I want 10 lakh in a year. So I'll place 10 orders. And say the cost is 100 per order. So 100 per order into 10 orders, I get the cost as 1000 rupees. Clear? Now I increase my order quantity. I'm ordering 5 lakh units in one go. So the number of orders required is only 2. So my ordering cost comes to 100 into 2, it's 200. So when the ordering quantity increases, number of order decreases and consequently ordering cost decreases. Clear? This is the second cost. Then we have carrying cost. What is carrying cost? It is the cost of holding inventory in the stock. Say for example, I have to incur storage cost, I have to incur interest cost, I have to incur insurance cost. All these costs I'm incurring because I'm storing the raw materials in the stock. Okay, once it enters the go down, till the time it goes into production, all the cost I'm incurring would be called as carrying cost. Carrying cost depends majorly on two factors. First is on the number of units. Suppose I have only 1 unit. Okay, I have to hold only 1 unit. Then I'll have a very small go down. So I will incur less cost. Suppose I have 10,000 units. I have so many units, so I have to get a big go down. So I have to incur more cost. So it depends on number of units. Next, it also depends on the period. Say for example, I keep my units in the go down only for 1 day. Okay, then it goes to production. So the interest cost I'm incurring would be very less. But I'm keeping it for 1 year. The interest cost I'm incurring is more. Okay, so carrying cost depends on two factors. One is number of units and other is the period for its held. Okay, so total cost for anything, if we have to get the total cost, how do we get? It's cost per unit into number of units. Similarly, to get the total carrying cost, How do we get? We get it as carrying cost per unit per annum into average inventory. Okay. First thing is, we told carrying cost does not only depend on the number of units, it also depends on for what period we are holding it. Okay, so we are taking it as carrying cost per unit per annum. And next, why are we multiplying it by average inventory? Say for example, my cost to hold 1 unit for 1 year is say 10 rupees. Okay, to hold 1 unit for complete 1 year, my cost is 10 rupees. Okay, so when we are multiplying it, okay, by what we should multiply it? We should multiply it with the units we have held throughout the year. Say for example, in a year we want 10 lakh units, but 10 lakh units would not be there throughout the year. We buy 10 lakh units, we go on consuming, it goes on reducing. What I want the units which I maintain throughout the year. What is the units which I keep throughout the year? It is the average inventory. Average inventory would be there throughout the year. So total carrying cost is carrying cost per unit per annum into the average inventory. Clear? Now, how do we get the carrying cost per unit per annum? It is generally given as percentage of purchase price. Now, how do we get the carrying cost per unit per annum? It is generally given as a percentage of purchase price. So carrying cost per unit per annum will be purchase price into carrying cost percentage. Now, how do we get average inventory? Average inventory generally is the ordering quantity divided by 2. Assume my ordering quantity is say 1 lakh units. So I place order for 1 lakh units. I go on consuming, it comes to 0. I again get 1 lakh units. I go on consuming, it becomes 0. I again get 1 lakh. So what is the number of units I have on an average? It is 50% of this. That is order quantity divided by 2. So my average inventory is order quantity divided by 2. And again, one interesting observation. When the order quantity increases, the average inventory increases, and accordingly the carrying cost also increases. Let's have a look into that. If my ordering quantity is say 1 lakh units, then the average inventory is 1 lakh divided by 250,000 units, and carrying cost say 50,000 into 2 rupees per unit per annum. It comes to 1 lakh. Now, if the order quantity increases to 5 lakh, then the average inventory would be 5 lakh divided by 2, that is 2.5 lakh, and the carrying cost would be 2.5 lakh into 2 rupees per unit per annum, that comes to 5 lakh. So when the ordering cost, when the ordering quantity increases, average inventory increases, and when average inventory increases, the carrying cost also increases. So this is the third cost, that is carrying cost. Okay, so carrying cost formula is carrying cost is equal to carrying cost per unit per annum into average inventory, wherein average inventory is equal to ordering quantity divided by 2. Carrying cost per unit per annum is a percentage of purchase price, so it is purchase price into carrying cost percentage. Clear? So we discussed the 3 inventory costs. So we have the purchase cost, ordering cost, and carrying cost. When we total all these 3, we get the total inventory cost. Clear? What is the objective? Okay, we are seeing at what order quantity the total inventory cost is minimum. Okay, what is the order quantity at which the total inventory cost? What is total inventory cost? Purchasing cost plus ordering cost plus carrying cost. Okay, so we have 2 different circumstances. First, when there is discount, and second, when there is no discount. Okay, so when there is no discount, purchase cost will be the same. So we discussed that if purchase cost is same, it becomes irrelevant. So we take a decision only based on carrying cost and ordering cost. So the alternative where the total of carrying and ordering cost is minimum would be selected. How do we get that? We get that by EOQ formula. Okay, and when there is discount, so purchase cost is not the same, it varies. So purchase cost is also relevant. So now we take a decision where the total inventory cost is minimum. Okay, so we have all the alternatives. We see the total cost in all the alternatives. Wherever it is minimum, we choose that. Clear? Now, coming to EOQ. What is EOQ? It is the most economical order quantity. It is the order quantity at which the total cost of carrying and ordering is minimum. How do we get it? EOQ is equal to square root 2AO upon C, where A is the annual demand of raw material, O is the ordering cost per order, and C is the carrying cost per unit per annum. One important thing to remember is at EOQ, ordering cost will be equal to carrying cost. Let's plot it on a graph. Suppose this is the order quantity. Okay, and this is the total cost. Okay, as and when the order quantity increases, okay, we discussed that the ordering cost decreases. So as and when the ordering quantity increases, the ordering cost decreases. And as and when the ordering quantity increases, carrying cost increases. Okay, and at this point, carrying cost and ordering cost meet. Okay, so here carrying cost will be equal to ordering cost, and at this point the total, that is the total of ordering and carrying cost, will be minimum, and this would be EOQ. Clear? Some important points from the past examinations. Okay, suppose in question they give us the demand of finished goods. We have to consider the demand of raw material, first thing. Next, annual demand of raw material is not equal to annual consumption of raw material. If consumption and stock adjustments are given, we have to get the demand as consumption plus closing stock minus opening stock. Next, we have to ensure the data is uniform. Say the demand A should also be on per annum basis, and the carrying cost should also be on per unit per annum basis. So ensure that the data is uniform. And next, remember that at EOQ, carrying cost will be equal to ordering cost. Sometimes in example, what they do is they don't give us the annual demand of raw material. It would be missing. So what you have to do, we know that carrying cost is equal to ordering cost. Based on that, we go on solving. We get the annual demand, and then based on the annual demand, substitute in EOQ formula and get the EOQ in terms of units. Clear? Next is the time between two different orders. Okay, so we know that at EOQ we are placing, say, X number of orders. How do we get the number of orders? It is the total demand. Say 10 lakh is what I want, and order quantity divided by 1 lakh. I'm placing every 10. So I'm placing 10 orders in a year. Say, so what is it mean? In 365 days, I'm placing 10 orders. So for one order, how many days I'm doing? Again, a simple cross multiplication. It is 365 days divided by 10 orders. This is the number of orders. Clear? So it can be either 365 days, or if question asks us in terms of weeks, it is 52 weeks, or in terms of months, it is 12 months divided by number of orders. Clear? And if question tells us, okay, don't take 365 days, they say 360 days, or say take 300 days, then whatever the question is telling, take that. Clear? Next. So we have discussed when there is no quantity discount is involved, how to get the total minimum inventory cost based on EOQ. Now, when quantity discount is involved, what do we do? Simple. First, calculate EOQ again, and get the total cost at EOQ. Now, there would be different discount offers. So at the discount offers, okay, you see what is the cost we are getting at the discount offers. Okay, wherever we are getting the minimum cost, minimum total cost, we select that. Say for example, our EOQ is 2 lakh, and at EOQ the total inventory cost is 10 lakh, and there are different discounts, and at 5 lakh the cost is 10.1 lakh, and at 10 lakh the cost is 9.8 lakh. What do you want? You want the minimum total cost. Where do you have the minimum total cost? At 10 lakh. So this order quantity of 10 lakh will be selected. Clear? Some important points from the exam perspective. First is calculation of carrying cost per unit per annum. We know that carrying cost per unit per annum is generally as a percentage of purchase price. That is, it is purchase price into carrying cost percentage. So now when we have discount, the purchase price varies, and accordingly carrying cost also varies. So keep that in mind. Generally students make a mistake. Next, when discount is given in a range, say for example, up to 500 units, cost is 1200. From 500 to 1000 units, it is say 1180, and so on. So what we have to do? So in the first range, we can take any order quantity, but let it be a round value. And from all the subsequent range, take the minimum quantity. That is the standard what ICAI is following. Clear? So we've discussed the first concept, EOQ and related concept. We've discussed the 3 inventory costs. We've discussed the EOQ formula. We've discussed what to do when we have discount. Now let's go to the next concept, that is inventory levels and its related concept. What does it deal? So when should we place order for goods? Okay, the moment we place order for goods, immediately next minute will we get the goods? No, it will take some time. And if you place order when the inventory becomes 0, then we would not be in a position to use raw materials in the intermediate period. So what we have to do is, before it comes to 0, at a point we have to place order, so that by the time we get goods, okay, there is no stock out. Okay, so what is it based on? It is based on 2 factors. First thing is how much time supplier takes to deliver goods. Say for example, supplier is taking 5 days to deliver goods. Okay, what is it called? It is called as reorder period. It is also called as lead time. And there is one more factor going there. And what is the usage I'm doing in that period? Say for example, every day I'm using 100 kgs. Okay, so supplier gives me in 5 days, and every day I'm using 100 kgs. So when I have 500 kg in stock, I should place order, so that in 5 days, by the moment it becomes 0, I get fresh quantity. Okay, clear? So the basics. Okay, the time supplier takes to deliver goods is called lead time, and the quantity usage in that period is also called as usage rate. Clear? So lead time or reorder period, what is it? It is the time supplier takes to deliver the goods from the date of placing an order. Okay, and generally it would not be given as a specific date. Generally they would tell we would deliver in 4 to 6 days. So in that case, what all we have the minimum lead time, that is 4 days. We have the maximum lead time, that is 6 days, and we also have the average lead time. How do we get average lead time? Sometimes it will be given in question. If it is given in question, use that. Say if they say average lead time is 4.4 days, use that. If it is not given in question, what we do is minimum plus maximum divided by 2. Okay. Next, we have the usage rate or consumption speed. What does it mean? It is the rate at which we use the raw material. That is, daily I'm using 100 kg raw material. Okay. If it is given in range, say for example 100 to 300 kg. Again, we take the minimum, average, and maximum. Minimum is 100 kg, maximum is 300 kg, average. Again, if it is given in question, use it. If it's not given, do minimum plus maximum divided by 2. Clear? Next is the reorder quantity. Okay, what is reorder quantity? The quantity for which we are placing order. Whenever we are placing order, say for example, every time I'm placing an order, I'm placing order for 1000 kgs. Then this 1000 kgs is my reorder quantity. It can be EOQ, economic order quantity. It can be non-EOQ also. That depends on our discount and other factors which we have already discussed. So based on this, okay, we are getting into different inventory levels. First is a reorder level. What is a reorder level? It is telling when should we place order for raw material. Okay, we should place order for raw material at such a point that there is no stock out. There is no stock out happening at all. Okay, so what are all the two factors? First is lead time, how many times supplier takes, and what is our consumption at that speed. Okay, say for example, we have lead time, we have the usage rate. On that basis, we have consumption. We have minimum, average, and maximum. Which one should we take? Okay, should we take minimum? Should we take average? Should we take maximum? We should take the maximum. That is, reorder level is equal to maximum usage rate into maximum lead time. What is our objective? Even if we use maximum, there should be no stock out. Okay, so for that, what we are doing is maximum usage rate into maximum lead time is a reorder level. So when it comes to 1800 kgs, we place order. So we go on using. By the time before it reaches 0, we get the raw material in all cases. Clear? That is reorder level. Sometimes safety stock will be given in question. Safety stock is a minimum stock we have set aside. So if safety stock is given in question, how we get reorder level is safety stock plus average usage rate into average lead time. Because we already have a safety stock aside, so we take average usage rate into average lead time. Clear? So we have discussed the reorder level. Next, coming to minimum level. What is minimum level? It is the lowest level of stock which is normally maintained throughout the period. Okay, it is not the lowest level of stock that is possible. Lowest level of stock possible is 0. I can use all the units and be left with nothing. That is 0, and that is of no use. I want to see what is the lowest level of stock which is normally maintained throughout the period. Okay, so normally maintained throughout the period. So how do I get? There is one thing. Okay, when do I have the minimum as well as the maximum stock? I have it on the day I receive the goods. On the day I receive the goods, before I receive it, I have minimum. The moment I receive it, I have maximum. Clear? So now to get the minimum level, I get it immediately before I get the fresh quantity of goods. Okay, so I reach the reorder level. From here, I place the order, and before I get the goods, okay, just immediately before I get the goods, what is the level I have? That will be minimum level, and I have to see what I normally maintain throughout the year. So I reduce it by average consumption. That is average usage rate into average lead time. Okay, so the minimum level is reorder level minus average usage rate into average lead time. Clear? Next, we have maximum level. What is maximum level? It is the highest level of raw material which can be held at any point of time. Again, I told maximum level, when do we have? The day we receive fresh goods. Okay, so we had reorder level. From here, we consumed some goods, and then we got the fresh units. So we got the maximum level. Okay, and what is this consumption? What should this consumption be? What are we seeing? What is the maximum possible? Okay, so when we are going on consuming, that means we are reducing. Okay, we consume very less, so that when we get fresh quantity goes, it becomes the maximum. Okay, so we reduce it by minimum usage rate into minimum lead time. Okay, So we get the maximum level as reorder level. From that we go on consuming. What do we consume? It is less minimum usage rate into minimum lead time, and then we get fresh quantity, that is plus reorder quantity. Okay. Next we have average inventory. It is just for calculation purpose. How do we get it? We get it as minimum level plus maximum level by 2. That is one formula, and another formula is minimum level plus half of reorder quantity. The second formula logic is simple. It tells, see, minimum level we maintain throughout the year. So why do you take average? Don't take average of that. Take it throughout. Okay. What varies is only the reorder quantity. So just take average of reorder quantity. Okay. So if in question, a question comes on average inventory, we should solve by both the approaches. Next, danger level. What is danger level? Okay, it is average consumption into lead time for emergency purchase. We went well below our minimum level. Okay, now there is a very serious risk of stock out. So now we have to place an emergency order. I don't care about how much cost I'm paying, but as soon as possible I have to get the goods. Okay, so we don't take the normal lead time. We are placing an urgent order. So we have a lead time for emergency purchase. Say normally we get it around in 4 to 6 days, but if I'm placing an emergency order, I'm getting it in 2 days. So I take the lead time for emergency purchase, I multiply it by the consumption or the usage rate. Okay, I multiply it by average consumption. Okay, instead of average consumption, okay, we can either use average consumption or minimum consumption also. Okay, both of this is accepted by ICAI. So lead time, we have minimum lead time, maximum lead time, average lead time, and slightly lesser than the minimum lead time, we have the lead time for emergency. Okay, and suppose this is our inventory. Okay, this is a reorder level. This is the level at which we place order, and this is 0. Okay, and from reorder level, if we reduce our average consumption, we get to minimum level. Clear? From reorder level, we reduce the minimum consumption. We've only consumed very less, and then we add it with the reorder quantity, we get the maximum level. And slightly below the minimum level, we have our danger level. So the difference between danger level and 0 is only our average consumption per day into the lead time for emergency purchase. Clear? This is the second concept. So we discussed EOQ and related concept. We also discussed the various inventory levels. In the inventory levels, we've discussed the reorder level, we've discussed the minimum level, maximum level, average level, and danger level. Now let's go to the third concept, material turnover ratio. Why do we use it? We use to see the speed at which raw material is moving, to see whether the raw material is fast moving, slow moving, or non-moving. How do we get it? We get it as raw material consumed divided by average stock of raw materials. And raw material consumed, we get it as opening stock plus purchases minus closing stock. And average stock of raw material, how do we get it? We get it as opening stock plus closing stock divided by 2. Okay. Say for example, the material turnover ratio is equal to 365 times. What does it mean? It means that the average inventory I'm having, I'm turning it 365 times in a year. Okay, I'm rotating it 365 times in a year. So more the material turnover ratio, the better it is. It denotes that the material is fast moving. Clear? That is material turnover ratio. Related to that, we also have another concept called as material holding period. Okay, material turnover ratio tells that whether the goods is fast moving or slow moving, but it does not tell for how many days I've kept the average inventory in stock. Okay, in how many days I've consumed it once. Okay, so for that we have material holding period. Say for example, in 365 days, I've rotated the material 50 times. So one rotation, how many days does it take? So again, cross multiplication, 365 days or 52 weeks or 12 months divided by 50 times. That is the material turnover ratio. That gives us the material holding period. Okay, this is the third concept. Then let's go on to the fourth concept, that is stores ledger. Okay, we have discussed EOQ, we have discussed inventory levels, we have discussed the material turnover ratio. Yes. Now let's go to the fourth concept, that is stores ledger. Okay, goods are generally stored in stores department, and as and when the production department wants it, it transfers the goods to a production department. Okay, stores department gets the goods from supplier, stores it, and as and when the production department wants it, it issues it. Okay, now what we want? Okay, we want a record of how many units are available in the stores ledger and what is the value. Okay, so what is stores ledger? It is a chronological record of receipts, issues, and balance of goods in store. It is chronological record of how many units we have received, how many units we have issued to production, and what is the balance goods available in stock. Okay. And for that, we want the quantity wise data as well as the value wise data. So this is the format of stores ledger: date, particulars, receipts, issues, balance. And for everything, we have quantity, rate, and amount. Okay. Important thing. First is write all the data in chronological order. Next, receipts. For receipts, specific rate will be available in the question. We should use that. Say, for example, raw material on first day we received at 15 rupees and second day we received at 14 rupees. As per the rate it is given in the question, we write it. Okay. And we get the quantity, rate, and amount. Now for issues and balances. Say, for example, we have 100 units at the rate 15 rupees, and we also have another 50 units at the rate 16 rupees. Okay, so totally we have 150 units and the total cost is 2,300 rupees. Now I have issued 50 units to production. Now I want to see what is the cost of the 50 units I've issued to production. It depends on the method of valuation. We can either follow FIFO or weighted average. If I'm following FIFO, what I tell, I've issued 50 units based on the first in, first out. So whatever I've purchased first at 15 rupees, it will be issued. So 750 rupees is the value of amount issued. And what is the balance I'm having? So I have 50 units at 15, 50 units at 15, and then again I have 50 units at 16. This is what we do for FIFO. So in weighted average, we don't take the individual rates. What we do is we take the total cost, we divide by the total units, we get a weighted average rate. So 50 units, I've issued it at the weighted average rate. I get the issue cost. And for the balance also, I don't want to see what is the amount purchased at first rate and second rate. I see totally I have 100 units at the weighted average rate. I get the amount. Clear with this? This is how we go on solving the stores ledger question. And in between, if there is any shortage, say for example, in my books, okay, it is showing 1000 units, but actually I'm having only 980 units. So there is a difference of 20 units. Okay. The difference, the shortage, it can be because of normal reasons or because of abnormal reasons. Okay. If it is because of abnormal reasons, we have a golden rule of costing. That is, abnormal items will never affect the cost of normal items produced. Okay. So abnormal items cost, we always transfer it to costing P&L. So we transfer this cost to costing P&L. So what we do, the quantity has reduced, right? So we put in the issue column. In the issue column, we put the quantity. We put the rate also based on whether it is FIFO or weighted average. We put the amount also. And in balance column, we write the revised quantity. Okay. And based on that, we write the rate and amount as well. Clear? If it is normal loss, okay, it is unavoidable, it is in the nature of business, then what we do? We inflate the cost of balance units. Okay. If it is abnormal, we transfer it to costing P&L. If it is normal, we inflate the cost of balance units. How do we do this? In issue, in the quantity, we write that the quantity has reduced. But in rate and amount column, we do not write anything. Why we don't write anything? Because we want to inflate the cost. So we don't write anything. And in the balance, we inflate the cost. Clear? So in issue, we only write in quantity column. And in balance, in terms of quantity, we write the actual quantity. The total cost anyways would be there. We write the total cost. Based on that, we get the inflated rate. Clear? So this is about stores ledger. Okay. So we've discussed 4 concepts, EOQ and its related concepts. Next, we had the inventory levels. Next was material turnover ratios. Now we discuss the stores ledger. Now we have the final area. Okay, the miscellaneous area. First is valuation of material. Just remember the 2 golden rules. First is cost of abnormal items shall not affect the cost of normal goods produced. Next, if credit is available against the cost, it is not treated as cost. Okay, let's have a look at the important adjustments. Discount, trade discount, quantity discount, subsidy, grant, incentive. Okay, all these shall be reduced, okay, from the cost. Next, if we have cash discount, it is not for purchase of material, it is for early payment, so no deduction will be available. Clear? Again, taxes can be GST or other taxes, say customs and other taxes. Okay, for other taxes, no credit is available, so it forms a part of cost. GST, 2 cases are possible. Firstly, credit is available, otherwise no credit is available. If credit is available, we've discussed that if credit is available against that cost, it would not be treated as cost, so it will be excluded from cost. But if no credit is available, then again it will be included in cost. Clear? Now we have penalties. So they can call it as demurrage, detention charges, penalty, fines, etc. Okay, all these are abnormal items. They don't happen normally. Okay, these are abnormal items and they could be avoided. So they would not form a part of cost. Clear? Then we have containers. When you are purchasing goods, okay, we might have to get them in containers and we are paying for the containers. Okay, containers can be non-returnable or returnable. If the containers are non-returnable, it is our cost only, so it will be included in cost. But if they are returnable containers, okay, what we have discussed, if credit is available, it is not a cost. So if full refund is available, full credit is available, okay, it is not a cost. Okay, but if only partial credit is available, see, I paid 1,000 rupees for the container and I got only 500 rupees, then the balance amount, the difference amount, 500 rupees will be treated as cost. Clear? Then we have the for the shortage or loss. For the shortage or loss, again, if it is abnormal, it will be transferred to costing P&L. If it is normal, we inflate the rate. So the shortage or loss is due to abnormal reasons. It would not form a part of cost. It will be transferred to costing P&L. If it is due to normal reason, we inflate the cost of good units. Clear? Then we have one final concept, that is ABC analysis. This is to exercise control. What it tells is there are certain elements, okay, which are very high in value but very less in terms of quantity. So we categorize the goods into A, B, and C, the raw materials. Okay, A category will take 70% of value but take only 10% of the quantity or the space. Okay, B will be 20% value and 20% quantity, and C would be 10% value and 70% quantity. Okay, for A category items, exercise strict control. For B category, exercise medium control, and for C category, exercise very minimal control. Clear? With this, we've ended the chapter material. So what all we have discussed? First, we discussed EOQ and related concepts. Therein we've seen what is the total inventory cost, purchase cost, ordering cost, carrying cost, and then what to do if there is no discount, what to do if there is discount. We've discussed EOQ formula and we've seen that at EOQ, ordering cost is equal to carrying cost. Then if there is discount, we told that take it based on the total cost. Then we had the different inventory levels. We had reordering level, minimum level, maximum level, average level, and danger level. Next, we came to material turnover ratio. We discussed the material turnover ratio formula, and we also discussed the material holding period. Then we came to stores ledger, what to do in stores ledger, what to do in receipts, issues, balance, FIFO, weighted average, what to do in case there is shortage. Then we came to miscellaneous areas. There we have discussed the valuation of material, and we have also discussed the ABC analysis. Clear? So let's begin with the chapter labor costing. Again, a very important chapter from the exam perspective. Every attempt, on an average, we have 9 marks of questions. So undoubtedly, this chapter falls in the category A. So the entire chapter I have bifurcated in 5 topics. First is the labor turnover ratios. Next is the labor remuneration system. And then we have the miscellaneous areas. In the miscellaneous areas, we have idle time, we have overtime, and we have the labor cost calculation. Okay. So first, coming to labor turnover ratio. Okay. What is labor turnover ratio? It is the rate of change of employees in an organization. Okay. So the number of employees would not be the same at any particular point of time. What are we calculating? We are calculating the rate of change of employees in an organization. That is called labor turnover ratio. So how do we get the rate of change of employees? What are we seeing? The change of employees. What are we comparing it against? The employees in an organization, and we are multiplying it by 100 to get the percentage. Okay. So what is the formula for labor turnover ratio? It is change of employees divided by employees into 100. Okay. Now coming to the number of employees. How do we get the number of employees? We know that the number of employees will not be the same at any particular point of time. So what employees number should we take? Should we take 1,000 employees, that is at the start of the year, or the employees at the end of the year? So to resolve this, what we do is we take the average employees in the year. Okay. So what is average employees? It is opening employees plus closing employees divided by 2. Okay. So in the denominator, instead of employees, what are we taking? We are taking the average employees. Next, we want to see the change of employees. So what can be the reason for changes? Okay. Change can be because of 2 major reasons. Some employees have separated from the organization. That is, some employees have left the organization. That's one reason. And some other employees might have joined the organization. That is, employees would have separated from the organization. That will fall the number of employees, and some new employees would have joined. That would rise. That would bring a rise in the number of employees. Employees separated maybe because of 2 reasons. First is, Okay, employees have left, okay, by themselves. Employee didn't like the job, he left the organization. That's the first reason. Second thing is, we have discharged him from work. We didn't want him there, so we have discharged him from work. So two reasons for separation: employees have left the organization, employees have discharged from the organization. And the new employees are joining. They are called by the term accession. What could be the two reasons for that? First thing is replacement. Some employees left the organization. In their place, we are replacing him with another employee. That is the first reason. Or there are new positions, there are new places opening up. For that, we want new employees. Okay, so change can be because of two reasons: separations and new employees joining. Separations can be because of employees who left the organization, employees who have discharged from the organization. New employees, that is accession, can be because of replacement plus new positions. Okay, so if you want to calculate the number of employees at the end of the year, how do you get it? Okay, we begin with the number of employees at the beginning of the year. Say, for example, we had 1,000 employees. Then we reduce the employees who have separated, reduce that is employees left and employees discharged. Say, for example, 150. And then add the new accessions, add the new entries, that is employees replaced plus employees for new position. This gives us the closing number of employees. Clear? So we got three different formulas. First thing is employees at the end of the year is equal to employees at the starting of the year less separation plus accessions. And then what is separation? It is employees left plus employees discharged. What is accession? It is employees replaced plus employees for fresh post. Okay. So again, coming to the formula, what is labor turnover ratio? It is rate of change of employees in an organization. So change divided by average employees into 100. Clear with this? So we have three different formulas. Okay. So for change, we are looking at different perspectives. First is a separation method. What are we doing here? We are looking at the proportion of employees separated to the average employees in an organization. Okay. Why are we looking at proportion of employees separated? Because these are unsatisfied employees. So we have to see how many employees are unsatisfied in the organization. So we are comparing the proportion of employees who are separated from the organization with the average number of employees. In our example, it was 150 employees, that was 100 left plus 50 discharged, divided by average employees 1037.5 into 100, which comes to 14.46%. Next, we have the replacement method. What it tells? It tells compare proportion of employees replaced with the average employees. Why compare employees replaced? Because to replace the employees, we have to incur cost. We have to select them, train them, and do all of that. So compare the proportion of employees replaced with average employees. That is number of employees replaced with average employees into 100. We get the labor turnover ratio. So in our example, it is 125 divided by average of 1037.5 into 100 gives us 12.05%. Next, we have the flux method. What is flux method? It tells consider both. Consider separation also, consider accession also. Why? It is telling we want to see the total change. In total, what was the change? Employee separated from organization is also change from the workforce. New employee added to organization is also change in workforce. So see the total change. So what is the total change? It is number of separations plus number of accession divided by average employees into 100. In our example, it comes to 36.15%. Okay, clear with this? Now, labor turnover ratio as per flux method will always be greater than or equal to the replacement plus separation method. Why? Because flex includes replacement, flux includes separation, plus flex also includes employees who have joined for fresh position. So if all the employee additions are only for replacement, okay, all fresh employees added are only for replacement, that is there is no fresh openings, then flux will be equal to replacement plus separation. But there are some employees who are added for new post, then flux, the labor turnover ratio as per flux will be greater than the labor turnover ratio as per replacement plus separation. Okay, this is the first concept, labor turnover ratio. How does ICAI ask questions from this topic? First will be the normal questions, that is question will give you the data, we have to calculate the labor turnover ratio. Second, we have the reverse calculation questions. They give us the labor turnover ratios. Based on that, we have to calculate the base data. Say for example, look at this question. They've given flux replacement and separation percentage. They've also given us the employees replaced. So we have to calculate average employees, we have to calculate the employees separated, and we have to calculate the new accessions. How do we do this? Okay, here we have replacement percentage is given, replacement number is also given. So based on that, put in the formula 10% is equal to employees replaced, that is 50, divided by average employees into 100. Average employees is missing. We substitute and we get the average employees as 500. So now we have the average employees. We have the separation method. So we can substitute and get the number of employees separated. And accordingly, we can also get the number of employees, okay, newly joined as per the flux method also. The next kind of adjustment, tricky adjustment in exam is question may ask us the equivalent annual labor turnover. Say in May 18, this question was there. So we calculated and we got the labor turnover ratio for 1 month as 3%. So question is asking what is the equivalent labor turnover for 1 year. So for 1 month, it is 3%. So for 1 year, we have 12 months. So how much it is? Simple cross multiplication. 12 months into 3% gives us 36% per annum. Okay. Next question might ask us, what is the total cost company is incurring due to labor turnover? What is the total cost? First, we have the cost incurred. That is, for employees who are leaving, we have to settle their dues, and to take new employees, we have to recruit them, select them, train them. So settlement cost, recruitment cost, training cost, and if they've made any mistakes, we have to rectify that. So cost of rectification. And we also have the contribution lost because an employee was not there. If the employee was there, we could have produced goods, sold goods, and earned contribution. But right now we are not earning. That is also a loss for us. So the contribution lost would also be included as a part of total cost due to labor turnover. Clear? So this is the first topic, labor turnover ratios. Okay. Now let's go to the second topic, that is labor remuneration system. That is, how do we make payment to the labor? Okay. There are majorly two broad systems of making payment to labor. First is the time rate system and second is the piece rate system. What time rate system tells? For how many hours you work, you get the payment. Say you work for 10 hours, you get payment for 10 hours. You work for 100 hours, you get payment for 100 hours. Okay, simple. So how do we get the wage payment as per time rate? It is the number of hours worked into rate per hour. Say for example, we work for 10 hours, the rate is 100 per hour. So it is 10 hours into rupees 100 per hour, we get it at 1000 rupees. And then we also have another method, that is piece rate system. What does it tell? It tells, see, how many hours you work does not matter, but how many units you manufactured. Based on that, we are going to make payment. So how do we get the wage payment? It is number of units manufactured into rate per unit manufactured. Okay. So if it is 25 per piece and 40 pieces have been manufactured, so it is 25 per piece into 40. This is again 1000 rupees. So the formula is number of pieces manufactured into rate per piece. Okay. And one more thing, we have to calculate the rate per piece. Question has given us the rate per hour. Question has also given us the pieces we can manufacture in an hour. So for an hour, we are getting a payment of 100 rupees. And in an hour, as a standard, we have to manufacture 4 units. So hourly rate divided by pieces per hour. So 100 divided by 4, we get the rate per piece as rupees 25. Clear with this? Next, we have the efficiency rating procedure. Okay. So for calculation of efficiency, we have two different bases. One is output. We can compare based on the output, or we can compare based on the hours. Okay, whichever base we are comparing, we have to keep one constant. If you are comparing based on the output, we have to keep hours constant. We should compare for actual hours. Okay, if you are comparing based on the hours, we should keep the output constant. That is, we should compare based on the actual output. Clear? Let's see. First, let us compare. First, let us calculate efficiency based on the output. That is where actual hours is here. Say we have worked for 8 hours. Okay, so in 8 hours, actually, we have produced 9 units, but standard general benchmark is 8. So we have produced more than the benchmark. Yes. So are we more efficient? Yes. So how do we get that? It is actual output in actual hours, that is 9 units, divided by standard output in actual hours. That is 9 unit by 8 unit. We get it at 112.5%. Don't by heart the formula. Just create an example and you will get the formula by yourself. Okay. So in 8 hours, if I produced more unit than standard, it is favorable. So it is actual output divided by standard output. Now, when we are comparing based on hours, so where the output is same. Say for example, for 1 unit of output, the standard hours is 3. Okay, but actually I have taken only 2 hours. I mean, I could have taken 3 hours, but I have done it in only 2 hours. Do you see how efficient I am? So how do we get it? Standard hours is always better. So we put standard hours in the numerator and we put actual hours in the denominator. So standard hours for actual output divided by actual hours for actual output gives us the efficiency. Again, don't by heart the formula, just go by the logics. You can create the formula by yourself. Okay. Then we have the different methods for payment of wages. Okay. So here we have a difference in old course as well as new course. Okay. For old course, we have all the payment methods, but for new course, we only have Halsey and Rowan plan. Okay. So right now what I'm doing is I will discuss only Halsey and Rowan plan. The old course students, all these things, notes are anyways available in this document. Again, the revision of all the payment methods is already available in the YouTube revision video, labor cost. Okay. From 30 minutes, if you start watching, in the next 20 minutes, every method is covered in detail. And again, a quick summary is done from 50 minutes to 55 minutes. So in 5 minutes, we have quickly summarized all the methods also. So the old course students, in addition to Halsey and Rowan, can go and refer it. Okay. So now let's come to Halsey and Rowan. Okay. So here the wage payment, okay, it is based on time rate. So how are we paying the employees? We are giving him the basic wages as per the time he is working, and also we are giving him some bonus. Okay. So in Halsey, okay, how are we paying him the bonus? We are paying 50% of cost savings as a bonus. Okay. Say for example, okay, employee had to produce an output in 10 hours. He has done it in 8 hours. So he has saved 2 hours. And say for every hour, we are paying him 100 rupees. So the employee has saved us 200 rupees. So 50% of that 100 rupees we pay to the employee. The balance 50% we keep it ourselves. Okay. So the total wage payment as per Halsey plan is a time rate plus bonus. Time rate is hours work into rate per hour that we have already discussed. And bonus, what is the bonus as per Halsey? It is 50% of cost savings. So how do we get how much cost employee has saved for us? It is the hours saved into rate per hour. Okay. So the final formula comes to time rate plus 50% into time saved into rate per hour. Okay. And then how do we get the time saved? Say for example, okay, to manufacture a product, the standard hours was 10, but actually he has done it in 8 hours. Okay. So time saved is equal to time allowed, that is 10 hours minus time taken, 8 hours. So here we have an example. The hourly rate is 100 rupees. Standard hours was 10. Actual hour taken is 8 rupees. So basic payment for 8 hours, 100 into 8 plus additionally, what is the time saved? He has saved us 2 hours. And what is the rate per hour? We have 200 rupees. So 200 rupees is the total cost saved. And 50% of that we give it to employee. So it is 800 plus 100. The total payment is 900 rupees. Okay. This is Halsey plan. Next we have the Rowan premium plan. Here also it is again time rate plus bonus. But how do we pay the bonus? Bonus is as a proportion of time saved to time allowed of time rate wages. Okay. So the formula comes to time rate wages plus the proportion of time saved to time allowed into time rate. Okay. Say time allowed is 10 hours. That is standard hours is 10 hours. Okay. He has saved 2 hours. That means of the time of the basic wage, we pay him 2 by 10. That is 20%. Suppose in 10 hours, he has saved us 4 hours. So we pay him 40% of that. So that's how it works. So the formula is basic wage plus time saved to time allowed of basic wage. Clear? So in our same example, 8 hours he worked. So 100 into 8 plus 2 hours he saved out of 10 hours, 2 by 10 into 800 rupees is the basic wage. Okay. One point of differentiation. Okay. In Halsey, we are paying him 50%. In Rowan, what are we paying? We are paying him time saved by time allowed. And next, in Halsey, the bonus payment is percentage of cost savings. How much cost he has saved? A percentage of that we are paying. In Rowan, what are we paying? We are paying him percentage of basic wages. Okay. That is a point of differentiation between Halsey and Rowan. Okay. And then we have BDOX and so many other methods which are applicable only for old syllabus. So you can have a look at it in the revision video. Now, coming to important questions. Have a look at this question. Okay. The minimum wage rate is 150 per hour. That is the time rate. standard time, that is time allowed is 50 hours. Okay, and effective hourly rate is 180, means as per Rowan. Okay, so what happened is he was efficient, so he got bonus. So based on the bonus, his effective hourly rate has increased. Now question is asking, what is the hours he has worked? Okay, so effective hourly rate is the rate per hour into number of hours worked. We are taking the number of hours worked as X. So time allowed is 50, time taken is X, therefore time saved is equal to 50 minus X. Okay, so we have the basic wages, that is for 150 per hour into X hours, so we have 150X, plus time saved, we have 50 minus X divided by time allowed, that is 50 hours, into the basic wage, that is 150X. We substitute, we get the X, that is the hours actually taken by the employee. Clear? Then especially whenever question asks on Halsey or Rowan, it asks us to take a decision at the end. Which is better? Which plan the organization should opt for? Okay, so our conclusion would be based on two factors. First is financial. Okay, so in financial, wherever the cost is less to the company, we will opt that. Say for example, as per Halsey, it is 900 rupees. As per Rowan, it is 960 rupees. Whichever is less, Halsey is less, we will opt that. And again, we also have non-financial factors. So in non-financial factors, always we have to write that Rowan is better than Halsey premium plan. Why? Because Rowan puts a check on careless paid. Okay, it is not paying you based on the cost saved. It is not paying based on the hours saved. It is paying you based on the percentage of basic wages. So it puts a check on the careless paid. And next, if there is error in setting standard time, there is not much loss in Rowan scheme. So we have to write this 2 standard points for Rowan scheme and tell that Rowan scheme is better than Halsey premium plan. Okay, so we are done with the labor remuneration systems. Now let's go to the final topic. Okay, let's see all the miscellaneous areas. First is idle time. Okay, what is idle time? It is the time for which we are getting payment, but we are actually not working. That is, it is the difference of hours paid and hours worked. Say for example, we are getting payment for 8 hours, but we are working for only 5 hours. So the difference 3 hours for which we are getting payment, but we are not working, is called idle time. What is the treatment? Idle time can be bifurcated into normal idle time and abnormal idle time. Normal idle time is unavoidable. Say for example, you have to take break for lunch, for tea, to shift between jobs and all of that. That is unavoidable. And abnormal idle time is avoidable. If management could have taken caution, they could have avoided this. Say for example, there was no power, okay, or machine broke down. This was avoidable. So this is called abnormal idle time. So in the 3 hours, say 2 hours is normal idle time and 1 hour is abnormal idle time. So for normal idle time, okay, the labor cost for the normal idle time would be charged to the product. How do we charge to product? We have 2 different methods. First thing is we charge the amount to factory overheads. Whatever is the labor cost for the normal idle time, we add it in the overheads. Or second way is to inflate the labor rate. Okay, so we can either charge it to factory overhead or we can inflate the labor rate. And abnormal idle time, how do we do this? We have a rule of costing. Anything abnormal will not be charged to cost object. Okay, so we always transfer it to costing P&L. So the abnormal idle time will be transferred to costing P&L. Okay, so normal idle time will be charged to product. How do we charge it to product? We can either inflate the labor rate and include it in labor cost, or we can charge it to overhead and then charge to product. And abnormal idle time will be transferred to costing P&L. Clear? Next we have overtime. What is overtime? It is the hours for which employee is working beyond the normal hours. Say for example, everyday employee has to work for 8 hours, but he has worked for 10 hours. Okay, so this 2 hours is called the overtime. How do we make payment for overtime? Generally, if we tell employee you work overtime, we pay you the standard amount. Employees would not agree. So we agree to pay him a premium. Say the normal rate is 100 per hour. Okay, what we tell is he is not willing to work for 100 per hour. He tells I can go home and sleep and enjoy. Okay, so what we are doing is we are paying him 50% premium. Okay, so for an hour we are paying him 150 rupees. So the total overtime rate of 150 rupees, now we are bifurcating. We are bifurcating into the normal rate, that is what is the amount we would have paid if he was working in the regular working hours, that is 100 rupees, and the overtime premium, what is the amount we are paying extra just because he is working overtime? 50 rupees. Okay, the normal rate will be charged to labor cost. Now we have to see what is the treatment for overtime premium. Okay, it depends from circumstance to circumstance. If overtime, we are working overtime on a customer's request, then the overtime premium would be charged to the customer. Okay, if it is due to mistake of some other department, it would be charged to that respective department. If we are working overtime due to an abnormal reason, we are transferring it to costing P&L. If we are working overtime due to shortage of labor, what we do is we inflate the labor. Okay, we inflate the labor rate. Okay, that is, we get the total cost divided by total hours, we get the inflated labor rate, and based on that we charge. Okay, and then if we are working overtime to increase output, then what we do is the overtime premium we charge it to factory overheads. So these are different circumstances and the treatment for the same. Now we have the final concept, that is effective labor rate per hour. Okay, effectively how much we have paid to an employee on an hourly basis. Okay, so how do we get it? We get it as total labor cost, okay, divided by effective hours employee has worked. Okay, clear? So what is labor cost? It is the total of all costs and benefits incurred by the employer for the employee. Okay, see, we have the basic pay, we have DA, we have bonus, we have commission, and we also have the employer contribution to ESI and PF. Okay, when we add all of this, we get the total labor cost. Clear? And what is the effective hours? Effective hours is the annual working hours minus normal idle time. Again, the rule of costing, we only reduce normal idle time. Abnormal idle time would be transferred to costing P&L. Okay, clear? And how do we get the annual working hours? It is 365 days minus holidays minus leave. We get the days we have worked and we multiply it by hours per day. Say for example, 365 days minus 65 days is holiday and leave. So we work for 300 days and we work daily 8 hours per day. So 300 into 8 hours per day gives us the total working hours. Clear? So we divide labor cost by effective hours, we get the effective labor rate per hour. Okay, and again, labor cost, okay, the amount we are paying to labor, we can bifurcate in 3 different parts. Okay, first is the total labor cost. What is it? What is employer paying totally to the employee? Okay, what is the expense from the employer side? Okay, it may go to the employee's pocket directly or it may go to government. Say for example, contribution to ESIPF, it goes directly to government, but still it is incurred by employer, so it will be included in cost. So what is total labor cost? It is the total cost, that is including contribution to ESI and PF. And then what is gross wage? Gross wage is the amount employer is paying to the employee. Okay, amount employer is incurring for the employee. This is the total labor cost minus contribution to ESIPF. Okay, and then net wage. What is net wage? It is the total net take home salary, what employee finally gets in his pocket. That is net wages. So we have an example here. Say basic DA and everything included is 10,000. Then we have contribution by employer of 1,000 rupees. So total is 11,000. So what is the total cost by employer? It is 11,000. So what is the labor cost? It is 11,000. But in this 11,000, 10,000 is for the employee and the balance 1,000 is towards contribution towards government. So the gross wages is only 10,000. And then what is the take home salary? 11,000 is what employer is incurring. In that 1,000 he is paying to the government as contribution for ESIPF. So we reduce the employer contribution of 1,000 rupees. Again, employee should also contribute some amount to the ESIPF. Say 1,000 rupees again. That also he reduces from the salary and only the balance amount he pays to government. So we reduce the employer contribution, employee contribution, and then we get the net wages. Clear? With this, we have ended the chapter labor cost. Okay, now let's get to the next chapter, that is overheads. Again, a very important chapter from the exam perspective. We have overheads, and then we have extension of overheads, that is called as activity based costing. Two chapters combined together, we have 17 marks on an average in every attempt. So undoubtedly these two are probably the most important set of chapters. Okay, first let's go to the chapter overheads. First let's discuss the relevance of overheads, then let's discuss the different methods of charging overheads, and then let's see the 5 steps for departmental rate method, and then let's see what is under and over absorption and the treatment for the same. Okay, first is the relevance of overheads. Suppose we are Xiaomi. Okay, we are manufacturing mobiles and TV. Okay, so to manufacture a mobile, say for example we are manufacturing Mi10. Okay, I know the direct material, I know the direct labor, I know the direct expense. So I got the total prime cost as 5,000 rupees. I can directly attribute this to the cost object. So I know per unit what is the cost I'm incurring. But I also have certain common expenses, say rent, advertisement. How do I charge this cost to the cost object? How do I distribute this to every mobile I'm manufacturing? Okay, so for this, we have to adopt a suitable basis on which we have to distribute the total overhead cost of the company to individual products. Okay, so all these indirect costs, we need to get the per unit cost to get the total cost, and based on the total cost, we add profit, we get the selling price. So to get total cost, we want overheads. Okay, overheads for the cost object. And how do we get the overhead? We have to follow a systematic method wherein we distribute the overhead amount on a suitable basis. Okay, so this is called as overhead absorption. So what is overhead absorption? It is the process of charging overhead to the job or batch or cost object. That is distributing overhead cost to the cost object or the unit on a suitable basis or a systematic basis is called as overhead absorption. Clear? So what is the total procedure? What is the overall procedure of calculating overheads? Okay, first we have to get the total amount of overheads. So in a period, what is the total overhead? Say for example, the total overhead comes to 10 crore rupees, and then we have to link the overhead with the suitable basis. We have to link every item of overhead with the suitable basis. Say for example, the different basis could be material cost, labor cost, or prime cost, or labor hours, or prime machine hours. So all these material cost, labor cost, and prime cost, they are in terms of rupees, and labor hours and machine hours are in terms of hours. Say the overhead is 10 lakh, okay, and we are comparing it with the material cost of 1 crore. So 10 lakh overhead divided by 1 crore material cost, we get it as rupees 0.1 per rupee of material. It is per rupee of material. Or if you want in terms of percentage, we can multiply by 100 and get it as 10% of material cost. That is when the basis is in terms of rupees. Then when the basis is in terms of hours, say we have 10 lakh overhead and we are comparing it against 1 lakh hours. Okay, so we get rupee 10 per machine hour. So when we are comparing it against the rupee value, we get 0.1 per rupee of material, or 10% of material cost, either in per rupee basis or on percentage basis. And when we are comparing it with the hour, we get the rate per hour. Okay, so we have the total overheads. Okay, and we are linking the overhead with the suitable basis, so that when the basis increases, the overhead also increases. So what we are effectively telling is, as and when the material cost goes on increasing, actually we know the actual material cost. So when the material cost goes on increasing, we are charging the overheads on the respective basis. Okay, so we get the total overhead, we are linking it with a suitable basis. So when we are linking it, we get the overhead recovery rate. Okay, that is overhead divided by basis, and using this we charge the overhead to the cost object. Clear? So this is the overall broad procedure of overhead. First, you have to get the total overhead, you have to link it with the suitable basis. So based on that, we get the overhead recovery rate, and using that we charge it to the cost object. Say for example, we got it as 0.1 per rupee of material, right? And to manufacture a mobile, say we are using 3,000 rupee worth of material. So it's 3,000 into 0.1. Therefore, the total overhead is 300 rupees. We knew the prime cost is 5,000. So 5,000 plus 300 gives us the total cost of 5,300. Clear? So this is the overall overview of the chapter overheads. Okay, now we have different methods of charging overhead. First, we have the single rate or blanket rate. Then we have departmental rate, and next we have activity based costing. Okay, Single rate or blanket rate. What are we doing? We are using one single basis to distribute the total overhead. So we have all different overheads, say rent, electricity, advertisement. So we're telling what is the total overheads? Tell us the total overheads. So the total overhead comes to 10 crore rupees. Okay, now we are comparing it with the basis. Okay, one single basis. Say for example, the basis is material cost. So the total overhead is 10 crore. We are comparing it with the basis that is 100 crore of material cost. So we get the overhead recovery rate as 10 crore divided by 100 crore. It is 0.1 per rupee of material. Okay. So to manufacture a mobile, say for every mobile, we are incurring a material cost of 3,000 rupees. So the overhead would be 3,000 into 0.1, that is 300. Okay, clear? So we already have the prime cost. We got the overhead. We got the total cost. Based on that, we get the selling price. So this was single rate or blanket rate. What we are doing? Total overheads of the company. We are comparing it with a single basis. Now we have departmental rate. What departmental rate tells? Don't take the total overhead of the company. Take the overhead department wise. Okay. And based on that, calculate the overhead recovery rate for every production department. So what it is telling? Okay, 10 crore is the total overhead. That's fine. But don't tell me 10 crore. Tell me the overhead for every department. Say we have 3 production department. It's 5 crore, 3 crore and 2 crore. So for every production department, we got the overhead. And for every department, we have to link it with the suitable basis. Say for example, for P1, we are linking it with labor hours. Okay, for P2, we are linking it with machine hours. And for P3, we are linking it with machine cost. Okay, so for every department, overhead divided by basis, we get the recovery rate. So say we got 50 per labor hour in production department 1, 30 per machine hour in department 2, and 0.1 per rupee of material in department 3. Okay, now to manufacture a phone, say I'm using services of only 2 departments, say P1 and P2. So based on whatever is the actual services I'm using, I will charge it. Say 50 per hour into 3 hours, that is 150, 30 per hour into 2 hours is 60, and this is 0.1 per rupee. And suppose I have not taken any material, it comes to 0. So the total overhead comes to 210 rupees. So how is it better from single rate? Firstly, in single rate, we were taking the total overheads of the company. Now we are going deeper. We are taking the overhead department wise. Again, in single rate, we were taking just a single basis. Now we are taking more basis. For every department, we are taking one basis. So this gives us a better estimation of cost than single rate. Okay, this was the example. We've already discussed this in the 20 hours revision batch. Next, we have activity-based costing. So what is activity-based costing? It is telling go deeper, go to every activity and then calculate. So say for example, one company. Okay, in one company, we have 5 production departments. But in one company, we are taking 100 activities. So it is telling, go to these individual 100 activities and see, compare every activity's cost with the basis and get the rate. Okay. So we have one company. Okay. So if you are comparing the total overheads of the company, what we get is blanket rate. Then we go deeper. We get to the departments. So we say we have 5 departments. So now for every department we are calculating, it is called departmental rate. We go even deeper. We go to individual activities. So we got 100 activities. So now we are calculating the recovery rate for every activity. It is called as activity-based costing. Simple. So we get the overhead activity-wise. We divide it by the basis activity-wise. We get the recovery rate, and based on that, we charge it to the product. Simple. Okay. So to summarize everything again, we get the overhead recovery rate, and based on that, we charge the overhead to the product. Okay. How do we get the overhead recovery rate? It is overhead divided by basis. Okay. In single rate, what we do, we take the total overhead and we compare it against a single basis. In departmental rate, what we do, we get the overhead department wise and we compare it with the basis department wise. And in activity based costing, what are we doing? We get the overhead activity wise and then we are comparing it with the basis activity wise. This gets us the overhead recovery rate, and based on that, we charge overhead to the cost object. Now let's go deeper. Okay. So let's go into departmental rate method and see how it functions. Okay. So what do we want? We want the total overhead department wise. Then we divide it by the basis, we get the overhead recovery rate, and based on the overhead recovery rate, we charge the cost to cost object. Simple. So how do we get the overhead department wise? Okay, we have 3 different steps. First, we have allocation. Next, we have apportionment, and then we have reapportionment. So first we allocate, then we have apportionment, and then we have reapportionment. By the end of this, we get the overhead for every production department. Now, this overhead amount, we compare it by a basis, we get the overhead recovery rate, and based on that, we charge it to the cost object. So we have 5 steps in departmental rate method. First is allocation, next is apportionment, next is reapportionment. Then we compare it with the basis, we get the overhead recovery rate, and based on the overhead recovery rate, we charge the overhead cost to the cost object. Okay. So what is allocation? So what do we do in allocation? Overheads of the respective department are charged to the respective department. That is called as allocation. Say for example, we have a rent of hardware department. Okay, hardware is one of the production department, and the rent there is, assume 10 lakh. So this is directly attributable only to one department, only to one production department. So for that we call as allocation. What is apportionment? What do we do in apportionment? Here we have the common overhead. Okay, so we are distributing common overhead between different departments. Say for example, we have common rent. Okay, in one building we have all different departments. So we have a common rent of, say for example, 50 lakh. So now we have to distribute it on certain basis. Say assume we are distributing it based on the floor area. This is called as apportionment. Okay, so allocation plus apportionment together we call it by the term primary distribution, because first time distribution of overheads gets over by allocation and apportionment. Okay, allocation plus apportionment is called primary distribution. Then we do reapportionment. What is reapportionment? Again, the departments in an organization can be classified into production department and service department. In reapportionment, we are distributing the overheads of service department to the production department. Okay, why are we doing this? Okay, because from the service department, we cannot get a direct link to the cost object. But from service department, we can get a link to production department, and from production department, we can get a link to the cost object. Okay, I'll give you an example. Say we have the canteen cost. Okay, say canteen cost is 10 lakh rupees for 1 lakh employees. Okay, this to manufacture, okay, MI10, what is the canteen cost? We don't know, but we can tell. Okay, in hardware department, there are 100 employees. So for 100 employees, what is the canteen cost? This we can get. So what we are doing, the service department cost, first we are transferring it to production department. And now we got the cost for production department. And from the production department, we know the total cost in production department, say, is 1 crore. So in this department, we've used it for manufacturing MI10 and TV. So based on that, we can distribute. Okay, so what are we doing? From the service department, we transfer it to production department, and from the production department, we are ultimately transferring it to the cost object. Okay, so the ultimate objective of reapportionment is overhead at service department should become 0. Okay, clear? So we have 3 different ways of reapportioning overheads. Okay, first is called the direct redistribution method. Here what happens? What is the assumption we are taking? We are telling service department provides service to production department. That is always true. But service department and other service department, there is no service. There is no connection at all. So we are telling that there is no service from one service department to another service department. Okay. In this example, how do we do? So we have the primary distribution here. These are the 2 service departments. So what are we doing? The HR, we are only distributing it to the production department. It's very simple. Directly the ratio will be given. We have to distribute it in that ratio. Say for example, we have 30 rupees here. We are distributing it in 1:1:1. So it gets 10, 10, 10. This gets cancelled. Similarly, we do it for repairs and maintenance, and ultimately we get the total overhead for every production department. That is direct redistribution method. Assumption is service department do not provide services to each other. Next, we have step ladder or non-reciprocal method. Here, what is the assumption? Service department, one service department provides service to other service department, but the other service department does not provide service to the first service department. Say for example, we have 2 departments, repairs and maintenance and HR. So what HR is telling is, okay, I provide service to repairs and maintenance. So to the employee of repairs and maintenance, recruitment, selection, payroll processing, everything I do. So I provide service to repairs and maintenance. But repairs and maintenance is not giving any service to me. Okay. So in such a case, we follow the step ladder or non-reciprocal method. Okay. So we have a golden rule for non-reciprocal or step ladder method. So in what basis we should reapportion the cost of service department? First, reapportion the service department which provides service to maximum service departments. Okay. Let's see it with an example. We have 3 service departments, S1, S2, S3. Okay. So the total service provided, okay, total departments to which it is providing services, that is for production plus service together. Okay. S1 is giving to 4, S2 is giving to 3, S3 is giving to 2. So if we rank on this, this is first, this is second, this is third. But we have to reapportion not based on the total departments, but based on the total service departments only. So say S1 is giving service to 1 service department, S2 is giving to 2 service department, and S3 is giving to 0. So the priority should be, this should be first, this should be second, and this should be third. Okay. So when we are reapportioning, okay, we got the primary distribution, allocation plus apportionment is done. Now we have to reapportion. Which department we will reapportion first? First we will reapportion S2. We will make that nil. Then we will reapportion S1. We will make that also nil. Then we will reapportion S3. Clear? Okay. Now we have reciprocal method. What is the assumption? We are telling there are 2 service departments. This service department provides service to other service department. Other service department also provides service to first service department. Say in our example, we had HR and repairs and maintenance. HR department is telling we are providing service to repairs and maintenance. We do the employee payroll processing, recruitment and other service. Repairs and maintenance is telling if your machines, if your laptops and other equipments are not working, who does the repairs and maintenance? We are doing it. So we also give service to HR department. So both the service department provide service inter se. Okay. So in such a case, what do? We have 2 methods. First is the trial and error method, or we also call it as the repeated distribution. Second, we have the mathematical method. We also call it the simultaneous linear equation. Okay. So trial and error, what do? We go on distributing till the amount becomes negligible. Say we have 100, 80, 60, 40 and 30 as per the primary distribution. Now what we do? We take one service department, distribute. We take the next service department, distribute. We keep on doing this till the amount becomes very small. Say first we distribute this 40 of repairs and maintenance in 1:1:1:1. So 10, 10, 10. We eliminate this, again 10. So now we got 40 here. So it is primary distribution 30 plus share of this is 40. So this 40 again we will distribute in 1:1:1:1. So 10, 10, 10. This we make it 0. But now here we got 10. So now we got 10 rupee cost. Again we distribute in the ratio 1:1:1:1. This becomes 0. 2.5 is there. Again we do. We go on doing till the amount becomes very minimal. Okay. Important things. If question does not specify till when we need to keep doing it, we need to do it for 3 cycles. That is, this and this together is called 1 cycle. Okay. Similarly, for 3 cycles we have to do. And next, when we are reapportioning cost of second department, okay, we have to reapportion the total overheads. So what is total overheads? It is overhead as per primary distribution plus share of other department. So here we saw, okay, as per primary distribution we have 30 rupees plus additionally we also had 40 rupees. So primary distribution plus share, that is 40 rupees, we will have to reapportion again. Okay, that's the second point to be kept in mind. And the last reapportionment, when we are doing the last reapportionment, we have to only distribute it to the production department. Why? Because ultimately we want the overhead at service department to be 0. So the last reapportionment, we are distributing it only to the production departments. Clear? Okay. Now let's go to the other method. Okay. That is mathematical method. So here what we are doing? So here we are creating a simultaneous linear equation, and based on that we get the amount. Say, as per primary distribution, the overhead is 40 and 30 rupees. Okay. So first we get the we assume the values as X and Y. So the total overheads in service department 1 is X. So what is X? We already have 40 rupees. Okay. And additionally, we also get some percentage from the other department. So it is 40 rupees plus percentage from other department. Assume it is 25, 25, 25, 25 percentage. So we get X is equal to rupees 40 plus 0.25Y. Again, we do the same for the other service department. So we assume the total overhead in HR department as Y. So therefore, Y is equal to rupees 30 plus 0.25X. We substitute and then we get the values of X and Y. So the values of X and Y, they are the total overhead. That is the original plus share of the other department. Clear? And here, some things to be kept in mind. First is creation of simultaneous equation. Be very cautious. Take the variables as X and Y. X and Y are the total overhead. So it is overhead as per primary distribution, that is existing overhead, plus share of other department. Don't forget to include this. Okay. Next, we cannot use this method if we have more than 2 variables, because linear equations work only if you have 2 variables. Clear? So we have done allocation, we have done apportionment, we got the primary distribution. From this, the service department cost, we reapportion to production department. Now we got the total overhead for every production department. Okay. We have to link it to a suitable basis. We get the overhead recovery rate, and based on the overhead recovery rate, we have to charge the overhead to cost object. This is the end of it. Clear? Okay. Now let's see few important things from the exam perspective. Okay. Direct cost, whether we need to include direct cost as a part of overheads. Okay, cost can be bifurcated into 2: direct cost, that is direct material, direct labor, direct expense, and indirect cost, that is indirect material, indirect labor, indirect expense. We call the indirect cost as overhead. Overheads will anyways be included in the overhead statement. But should we include direct cost as well? Again, we are bifurcating the direct cost in production department. Okay, it forms a part of prime cost. So we are not including it in overhead. But the direct cost in service department will be included in overheads. This is a very important point to be remembered. Okay, why? Because ultimately all cost of service department is indirect cost when we are manufacturing a product. Okay, say for example, okay, canteen cost. Canteen cost is 25 per person. Okay, if you see on per person basis, it is variable cost. It is directly related to the number of employees. But when we are seeing to the cost object, to manufacture 1 unit of mobile, what is the amount of canteen cost we have to incur? There is no direct relationship. So ultimately that becomes indirect cost. So it will form a part of overheads only. Okay, that is a point to be remembered. Direct cost in service department will also fall under overheads. Okay, next, if question tells general, sundry expenses, miscellaneous expenses, on what basis we should distribute? We treat it as employee related cost, and based on number of employees or labor cost, we distribute it. And next is repairs, insurance, rate and taxes, depreciation taxes. All these are dependent on asset value. So we will distribute it based on the proportion of asset value. Next, power versus lighting. Okay, lighting we distribute based on number of light points. Lighting is the general electricity expense. Power is for the machines. Okay, so we distribute it based on the kilowatt hours consumed. So with this, we discussed the 5 steps for departmental rate method. We get the total overhead department wise. Okay, for that we follow allocation, apportionment, reapportionment. We compare it with the basis. We get the overhead recovery rate, and this rate we charge it to the cost object. Clear? Now we have the last topic, that is under or over absorption of overheads. First, why does this situation arise? Okay, we have to calculate the overhead cost per unit at the start of the year. So throughout the year, we need to keep calculating. So what we do is we estimate the cost of overhead. Okay, we are not taking the actual overhead. We estimate the cost of overhead at the beginning of the period. Okay, so based on that, what we do, we take estimated overhead divided by estimated basis. We don't know the actual. Okay, because of this, there is a difference. Okay, so what can be the reasons? First thing is actual overhead is not equal to estimated overhead. That could be the first reason. And next is actual basis is not equal to estimated basis. So because of these 2 reasons, there can be under or over absorption. Okay, so On a timeline, I've drawn a year. At the start, okay, I estimate what is the overheads I might incur in this year. Okay, so based on the estimation, I get the estimated overhead. I divide by the estimated basis, I get the overhead recovery rate. So estimated overhead, okay, we are estimating it at the start of the year. Why are we using it? We are using it to get the overhead recovery rate. Clear? Then throughout the period, okay, this is absorbed overheads. Okay, and then throughout the period, based on the overhead recovery rate, okay, we charge overhead to the cost object. Okay, say for example, we got the overhead as ₹100 per labor hour. So every hour the labor is working, we add 100 rupees for the cost. Every hour labor is working, we add 100 rupees to the cost. So throughout the period, whenever labor is working, we are adding 100 rupees for every hour. This is absorbing. Okay, what we are doing? We are charging the cost to the cost object. This happens throughout the year. How do we do this? We have the overhead recovery rate into actual basis. In our example, it is 100 per labor hour into actual labor hours worked. Okay, clear? Then we have the actual overheads, the actual overhead amount. This we come to know at the end of the year based on the actual expenditure incurred. Clear? We have estimated overheads, absorbed overhead, and actual overhead. Okay. So what is absorbed overhead? How much overhead is charged to the product? And what is actual overhead? What is the total overhead incurred? There will be a difference between the two. And this is under or over absorption. So under or over absorption is the difference between absorbed overhead and actual overhead. Clear? So let's see it with the help of an example. Okay. So suppose the absorbed overhead is 90,000 and actual overhead is 1 lakh. Okay. Actually, I've incurred 1 lakh, but only 90,000 I've charged to the product. So I've charged 10,000 less. Okay, so where the absorbed is less than actual, we call it under absorption. We call it under absorption. Okay. Actually, I've incurred 1 lakh. I've absorbed also 1 lakh. So it is the same. So this is called full absorption. And next, over absorption. Okay. Actually, my overhead cost is 1 lakh only, but I've absorbed 1.1 lakh. I've absorbed more, I've recovered more. This is called as over absorption. Clear? So when do we get under and over absorption? Under absorption is when the absorbed overhead is less than the actual overhead. Over absorption is when the absorbed overhead is greater than the actual overhead. Okay. So we came to know why under or over absorption occurs, what under or over absorption is. Now let's go to the treatment. How do we treat under and over absorption? Okay. For costing purpose, we have 3 different treatments. First thing is to carry forward to next year. What it tells, don't do anything. Automatically next year it gets adjusted. Okay. So don't do anything. That's what it tells. So carry forward the under or over absorption to the next year. Okay. We will not use these assumptions in the exam unless ICAI is specifically asking us to do this. Okay. Next thing is to transfer the under or over absorption to costing P&L. When do we do this? We do this if the difference is small or if the difference is due to any abnormal reason. We've already discussed if it is due to abnormal reason, we will not let it impact the normal cost. So we transfer it to costing P&L. Say for example, our actual overhead is 1 lakh and you have absorbed 90,000. So we have absorbed 10,000 less. Okay, and assume this is because of an abnormal reason. So this amount we will transfer to costing P&L. Clear? This is the second method. Next, third is we charge the under or over absorption using a supplementary rate. Okay, when do we use it? We use it if the difference is substantial, if the difference is huge, or if there is a genuine increase in cost. Okay, if it is due to abnormal reason, we transfer it to costing P&L. If there is a genuine increase in cost, we charge using supplementary rate. Okay. For example, okay, the absorbed overhead is 2 lakh. The actual overhead is 3 lakh. So actual overhead is more. We have absorbed less. So it is under absorption of 1 lakh. Clear? Okay. Absorbed overhead is 2 lakh. Say for example, how do I absorb? Say I absorb based on labor hours. So for every labor hour, okay, I absorb say 100 rupees. Okay. So labor is working. So for every hour labor is working, I absorb 100 rupees. Clear? So absorbed overhead of 2 lakh rupees. How do I get? Every hour labor is working, I charge. So if labor is working, he should be engaged in production, right? And he's engaged in production. Either goods should be complete or goods are still in progress. So either manufacturing should be complete, that is, it is finished goods, or it is a work in progress. Clear? So either it is finished goods or it is work in progress. Again, finished goods, they might be sold already or they might be unsold. So if they're sold, okay, it will go to cost of goods sold. If they're unsold, it will be in closing stock of finished goods. Work in progress would generally be unsold and it would be in the closing stock of work in progress. So this absorbed overhead of 2 lakh amount, this is spread over 3 different accounts. One is cost of goods sold, that is for sold finished goods, then closing stock of finished goods, that is for unsold finished goods, and then closing stock of work in progress, that is for work in progress which is unsold. So when absorbed overhead is spread across these 3 accounts, this under absorption will also be spread across these 3 accounts only. So when we are charging using supplementary rate, we charge it to these 3 accounts. One is cost of goods sold, next is closing stock of finished goods, next is closing stock of work in progress. Clear? Okay, next, how do we charge? Okay, question can give 2 different approaches. First is question has given us the rupee value, next question gives us the units. Say for example, the under absorption is 1 lakh rupees and it tells cost of goods sold, finished goods and work in progress is rupees 5 lakh, 3 lakh and 1 lakh respectively. Steps are simple. First, calculate the supplementary rate, that is under absorption of 1 lakh divided by the total cost of 10 lakh rupees. So we get it as 10%. Okay. Next step is to charge. Okay, in cost of goods sold, it was 5 lakh was the original into 10%. 10% is a supplementary. So 5 lakh into 10% is 50,000, 3 lakh into 10% is 30,000 and 20,000. That's how we distribute the 1 lakh rupees. And if question gives us units, what we have to do is we have to get equivalent units. Remember, it's not the units, you have to get the equivalent units. So how do we calculate equivalent units? Question will give us the units. Question will also give us the percentage completion. So units into percentage completion gives us the equivalent units. Okay, so assume the equivalent completed units is 10,000. And now we have to calculate the supplementary rate. It is 1 lakh under or over absorption divided by 10,000 equivalent units. We get it as rupees 10 per equivalent unit. So we got the supplementary rate. Now we have to charge. Okay, again, for those 3 accounts, cost of goods sold, finished goods and work in progress, based on the equivalent units into cost per equivalent unit, we charge it using supplementary rate. Clear? With this, we are done with the chapter overheads. Okay, now let's get to the next chapter, that is activity based costing. From the exam perspective, it is one of the most important chapters. Every attempt you are having a 10-mark question. So undoubtedly it falls in the A category chapter. Okay, it is very simple, very easy and very scoring. Again, let's get the basics right. What is activity based costing? It is a method of charging overhead. It is more detailed than the previous 2 methods. So we have single rate, we have departmental rate and activity based costing, which is most detailed. Activity based costing is most detailed and gives us the most accurate estimation of cost. Okay, so we have the same procedure for getting the cost, overhead cost. We get the overhead, but here we are getting it activity wise. We are comparing it with the basis. Again, the basis is also activity wise. Based on that, we get the recovery rate. Based on the recovery rate, we charge the overhead to the cost object. Okay, say the total overheads of the company is 10 crore rupees. We are telling we don't want the total overheads. Tell me what is the overhead activity wise. Okay, say we have different activities. So I have made a list of different activities and the total of all the activities, the overhead comes to 10 crore rupees. Okay, so I have here the material ordering cost. So the overhead is 10 lakh rupees. On what factor the cost changes? Material ordering cost. It is based on the orders placed. I have placed one order, I am paying 10 rupees. I am placed another order, again 10 rupees. So it is based on the number of orders. Okay, say in a period we have placed 1 lakh orders. So we get 10 lakh is the overhead activity wise divided by the basis, that is number of orders, 1 lakh orders. So we get the recovery rate, that is 10 per order. Similarly, machine setup. Okay, it varies based on the number of times you have carried on the machine setup. Say 10 lakh is the overhead divided by 1 lakh setups. Again, we get rupees 10 per setup. And now, okay, we are manufacturing MI phone. We know our prime cost is 5,000 rupees. Now we have to calculate the overhead. We see what are all the activities we have used to manufacture MI phone. So we have placed orders 10. Okay, we have placed 100 orders and the cost is 10 per order. So we get it at 10 into 100,000 rupees. Again, machine setup. We have set up the machine 50 times and the cost is 10 per setup. So we get it at 500 rupees. So 5,000 plus 1,500, we get the total cost as 6,500. Based on that, okay, we add profit and we set the selling price. Clear with this? Okay, this was just a general overview. Now let's get to the detailed steps for activity-based costing. Okay, we will derive it from the traditional method, that is the departmental rate method. Okay, in departmental rate method, we had two departments. One is production department and service department. Okay, in activity-based costing, we are bifurcating the activities into two. We call it the primary activity and support activity. Okay, so how do we get? So first we get the total overhead, we divide it by the basis, we get the overhead recovery rate. Based on that, we charge to cost of it. Simple. Okay, so first step is to get the total overhead. How do we get it? In traditional, allocation plus apportionment plus reapportionment gets us the total overhead department wise. In activity based costing, what you have to do? We just need to slightly modify it a bit. Again, we want the total overhead activity wise. Again, we are doing allocation activity wise, apportionment activity wise, reapportionment. In reapportionment, what are we doing? We are reapportioning cost of support activity to the primary activity. Okay, based on that, we get the total overhead activity wise. Again, we are comparing it with the suitable basis. We get the recovery rate, and based on the recovery rate activity wise, we charge the cost to cost object. Okay, simple. But here, the total overhead activity wise, we call it by a name. We call it as activity cost pool. And again, the basis. Okay, what drives the cost of activity? Okay, what is the basis? We call it by the name activity cost driver. And the recovery rate for activity based costing, we are calling it as activity cost driver rate. Okay, so traditionally, how do we get? Overhead recovery rate is equal to overhead divided by basis. It's the same here in activity based costing, but we are telling different names. So what are we getting? Activity cost driver rate is equal to activity cost pool, that is the total overhead activity wise, divided by activity cost driver, that is the basis for individual activity. Clear? So we have the format. Okay, we get the activity cost pool, that is the total overhead activity wise. Then we compare it with the suitable basis, that is we compare it with the activity cost driver. We get the activity cost driver rate. Simple. That's all the chapter is all about. And golden rules for the chapter overheads and ABC. Okay, first thing is prime cost per unit will be the same in all three methods. Okay, whether you're following single rate, departmental rate, or activity based costing, prime cost per unit will be same. Next, total overheads. In our example, it was 10 crore rupees. It will be the same in prime, in single rate also, in departmental rate also, in ABC also. Clear? And then if company is manufacturing only one product, then the total cost and overhead cost per unit again will be same, because ultimately this 10 crore, okay, whether we are distributing it based on 5 crore, 2 crore, 3 crore, or activity wise, or the entire 10 crore, ultimately this 10 crore is being absorbed by this one unit only, one type of goods only. Okay, so if the company is manufacturing only a single product, it does not make a difference whether we are following single rate, departmental rate, or activity based costing. So three important points to remember: prime cost per unit will be same, total overhead cost will be same, and if company is manufacturing only single product, then the total cost and overhead cost per unit will be same. Okay. Important thing from the exam perspective, every time ICAI is asking question from this chapter, what it is doing is, okay, it gives us the data, the entire overhead data. Then it tells calculate overhead as per traditional method, calculate overhead as per activity based costing. Okay, so the traditional method, we calculate overhead. Okay, again, as per activity based costing, we calculate overhead. At the end, we have to prepare a table for comparison. Okay, so we get the cost as per traditional method, then we put the cost as per activity based costing. Okay, here I've given you notional amounts. So which helps us in getting a better estimate of cost? Activity based costing, because it is more detailed. Okay, so cost as per ABC is more accurate than the traditional. So say as per traditional, the cost came to 100 rupees, but as per ABC, the cost has come to 80 rupees. Okay, so what are we going to tell? We will tell that we have overcharged the overhead by 20 rupees. So actually we should have charged 80 only, we have charged 100 rupees. Okay, that is a conclusion. Suppose the overhead as per traditional is 120 and the overhead as per ABC is 150 rupees. So what do we tell? We have undercharged the overhead by rupees 30. Okay, so this is what we ultimately have to give. Calculate overhead as per traditional, calculate overhead as per activity based costing. Based on that, tell whether we have undercharged or overcharged the overheads. And always remember, overhead as per activity based costing gives us a better decision, a better estimation. Clear with this? So two important chapters revised very quickly.